Welcome to the Tuesday edition of the Tech Stocks Daily Podcast, where tech news meets the pulse of Wall Street. Buckle up as we dive into Microsoft's latest saga, a whopping $69 billion acquisition of Activision Blizzard that shook off FTC roadblocks and filed lawsuits. We'll explore its impact on Xbox Game Pass, revealing both promise and controversy. Then we're headed over to IREN Energy's legal whirlwind as two lawsuits test their tech model. Over at Block, find out why bearish bigwigs and eye-popping earnings projections have everyone talking. Finally, discover how Intapp's AI innovations are revolutionizing accounting in partnership with Crete Professionals Alliance. Don't scroll away. Tech's biggest players are redefining the game, and we've got all the juicy details. All right, folks, buckle up, because we're diving into the latest saga in the sprawling epic that is Microsoft's journey through the tech and gaming worlds. First up, the main headline grabbing everyone's attention today is Microsoft's settlement of a high-profile antitrust lawsuit centered around its hefty $69 billion acquisition of Activision Blizzard. Now, I know what you're thinking. Whoa, that sounds like a lot of zeros, and you're absolutely right, but here's the scoop. Back in 2022, a group of vigilant gamers, acting as self-proclaimed guardians of fair game prices and play, filed a lawsuit against Microsoft. Their fear? That this mammoth merger might lead to Microsoft hogging all the good games and making it unfairly pricey for everyone else. We're talking games like Call of Duty, World of Warcraft, and Candy Crush, potentially getting less friendly to non-Xbox users, a sort of gaming doomsday scenario. However, this case has recently been dismissed with prejudice, legal jargon for saying they can't bring it back from the grave. Even though the exact terms of this settlement are shrouded in mystery, what we do know is both parties have agreed to pay their own lawyers, so there's probably no hard feelings, right? Simultaneously, Microsoft also battled against the Federal Trade Commission, which, like the concerned friend who knows Monopoly ain't a board game here, attempted to bar this blockbuster deal, albeit unsuccessfully. With the transaction now officially closed, Activision Blizzard is firmly part of the Microsoft family. This acquisition has already started to reshape Xbox's flagship subscription service, Xbox Game Pass. While exciting titles like Call of Duty are gradually making their way to Game Pass, there have been tectonic shifts in how this all shakes out in terms of tiers and pricing. Imagine upgrading your Starbucks order from a tall to a venti, but in this case, it's gaming perks getting recategorized. Day one game releases are now locked into the more exclusive and pricey Game Pass Ultimate or PC Game Pass subscriptions, much to the chagrin of fans rocking the basic tier. Even the FTC joined the chorus, describing it as a degraded product. Ouch, that's some spicy feedback. And let's talk numbers. Game Pass Ultimate saw its monthly fee leapfrog from $16.99 to $19.99 back in July. A staggering upheaval that fueled gamer rants online and stirred the FTC to wave more red flags, accusing Microsoft of flexing new market muscles post-acquisition. But wait, Microsoft says hold up, defending its multi-tiered pricing strategy, denying the whole degraded spiel, and even tackling layoffs, like the 2,550 positions slashed post-buyout from their gaming teams. Layoffs included roles at Activision too, hinting maybe the limited integration party didn't quite pan out as planned. So, as Microsoft trades retorts with the FTC and deals finger waggles from its fan base, it's clear the tech giant isn't hitting game over yet. They are charging forward, exploring ways to upsell that $69 billion investment, ads possibly in the mix. Grab your controllers and stay tuned, because the game's not ending anytime soon. Today, IREN Energy Limited, listed on NASDAQ under the ticker IREN, found itself at the center of not just one, but two significant legal alerts that are shaking up the trading community. Hang on to your tech hats, because we've got some serious litigation vibes happening. First up, we've got Braunstein, Gewurz & Grossman LLC, a law firm famous for putting the class and class action lawsuits, announcing their move against IREN Energy. They filed an action on behalf of investors claiming violations of federal securities laws. The crux of the lawsuit centers around alleged misleading statements that IREN Energy's management made concerning their company's prospects, particularly its data centers and its high-performance computing capabilities. Think computing like an express train, but imagine as it arrives, it's actually a bicycle. The issue revolved around disclosures regarding their Childress County, Texas site, a location that's allegedly causing more of a headache than high returns. Investors who hopped on the IREN Express between June 20th, 2023 and July 11th, 2024 could potentially rally together for recovery action, since the revelations supposedly hit their wallets harder than a surprise software update on a busy Monday. And for those hoping to lead the charge in these legal sideshows, you've got until December 6th, 2024 to step up to the litigation plate. But wait, there's more. As if one lawsuit wasn't enough to bust open the piñata of legal issues, now we have another firm joining the confetti storm. Block & Leviton also announced their concerted efforts against IREN Energy and its execs for allegedly flaunting the truth regarding similar data center prospects crucial to a company's perceived value in AI operations. These newbies on the litigation block are encouraging investors who took a financial nosedive to sign up and potentially claw back some losses. Block & Leviton are quick to remind investors that joining a class hasn't been certified yet. Translation: the courtroom buzz means you're a free agent unless you decide to step up as a lead plaintiff. Both firms are implying that IRES Energy's portrayal of its business model may have been more fiction than fact, at least according to the allegations set forth. Investors who keep a keen eye on their NASDAQ stocks might want to dig deeper. For any of you bearing secrets worthy of a Netflix procedural, Block & Leviton is also keen to engage potential whistleblowers for crucial insider information. The storm clouds gathering over IRES Energy show us just how essential transparency and accuracy are in the chaotic yet exhilarating world of tech investments. The lawsuits claim that the market reality check has investors crunching more than just numbers. Recalculating trust in corporate narratives impacts stock value. For IRES Energy, the order of the day is damage control, not just by correcting any alleged past missteps, but cementing confidence with wary investors. Stay tuned as this courtroom drama unfolds. Well, it looks like Block, also known as SQ in the ticker sphere, is having its moment of fame on Wall Street, and not necessarily for throwing a high-five party. The buzz today is all about the roller coaster that is their options trading. It seems like some heavyweight investors, the kind that might actually bench press gold bars, are adopting a bearish stance toward Block. Yeah, they're not passing out honey bears here. In fact, a whopping 66% of big-time investors are feeling bearish. A little reminder, for those who are not in the financial lingo club, being bearish means your skepticism could rival that of a cat looking at water. According to Benzinga's options scanner, there have been some unusual activities. Imagine 12 extraordinary options activities, and you'll wish you could rate them like X-Files episodes. Mostly, these involve calls and puts with some serious money at play. We're talking amounts ranging from $62,430 in puts to $618,410 in calls, steering towards a price window for Block between $45 and $80. It sounds almost like a luxury New York flat rental range, but hey, it's finance. Block, founded in 2009 and originally known as Square, made its fortune by providing payment services that are, well, indispensable nowadays. Their famous Cash App has made splitting dinner bills so easy that the words, "You owe me $10" have become uncool. With a total payment volume tipping over $200 million in 2023, they sure have shown they know their calculator's worth. On the other hand, why the sudden focus on Block, you ask? Well, investors are scrutinizing the eye-popping earnings expectation of 88 cents per share for the current quarter. That's a hefty 60% swing from a year ago. The market also expects Block's revenue to clock in at figures that could make Tony Stark smile, like $24.52 billion this fiscal year. But wait, there's more numerical moonwalking happening here. Irrespective of the figures, comparisons have found that Block tends to turn into the underdog more of the time than not. 3 out of the last 4 quarters saw Block outperforming EPS estimates 3 times, showing they're keen on crashing revenue expectations parties 3 times as well. Despite all the number crunching, Block's Zacks rank, which helps predict price behavior using analytics fancier than a tuxedo, settled at a modest number 3, indicating nothing extraordinary, but rather indicating that they might bob along with the market wave. So dudes and dudettes, why does this all matter? Simply put, today's moves hint at changing perceptions around Block's future course, and whether you like to dance in the Bulls Club or prefer the Bears Cave, Block gives you something to think about. Unlike my credit card statement, Block has a strong game based on current earnings estimates, future projections, and a penchant for getting market analysts buzzing. Keep your eyes peeled, because you never know when the frenzied changes might spell opportunity or caution. And isn't that what keeps financial folks on their toes and investors caffeine-dosed? Intapp has been in the tech spotlight today thanks to their strategic partnership with Crete Professionals Alliance, an emerging force in the rapidly evolving accounting sector. Here's the scoop. Crete PA is revolutionizing how accounting firms of varying shapes and sizes operate by forming a network that retains local identities while leveraging national resources. This vision is powered through cutting-edge tech implementations with the help of Intapp. Accounting firms are raging a battle against dinosaurs. Okay, not actual dinosaurs, but the sluggish ways of spreadsheets and manual processes. Cue in Intapp, a global ally armed with AI-powered solutions that streamline back-office operations such as conflicts and independence verification, an area fraught with red tape and caution signs screaming stressed accountants. So, here's how the magic happens. Crete PA has integrated Intapp software to centralize conflict and independence processes in their rapidly expanding firm network. By using a consolidated data warehouse, Intapp's AI scours through potential regulatory snafus, scanning for conflicts as easily as your mom judges you at Thanksgiving dinner. This amounts to a whole new level of compliance agility, handling thousands of potential conflicts in advanced timelines. Swift compliance not only saves time but dramatically reduces the firm's risk management profile. And who doesn't like that? But there's more. Crete PA isn't stopping with just the Intapp conflicts tool. They're powering up with Intapp Intake, which will automate and ease onboarding even more swiftly. Gone are the days of stuffy boardroom meetings with leaflets discussing onboarding protocols while everyone avoids soggy donuts. It's now all AI, baby. But why is this such a juicy tidbit? With an injection of private equity funding becoming a new norm for professional service firms seeking growth through mergers and acquisitions, having centralized, tech-enabled back-office solutions is an ace card to further scalability without losing the essence of what makes these firms unique. Crete PA and Intapp are crafting a modern-day masterpiece, a digital brush against the canvas of the professional world that's redefining industry standards. So what do you guys think? Is AI and technological innovation like Intapp's the knight in shining armor for industries traditionally tangled in endless paperwork? Or are there unseen dragons lurking around the AI tower? Your thoughts are as valuable as a perfect Wi-Fi connection, so throw them in the comments below. All right, tech fans, let's focus on Microsoft's shares for a minute here and determine whether you'd hit that sell, buy, or hold button on your trading app. Given today's high drama from Redmond HQ, there's quite a bit to digest. Microsoft wrapped up the massive $69 billion Activision Blizzard deal after wrestling with lawsuits and the FTC's objections. This move places them firmly into the spotlight with some hefty potential to dominate the gaming subscription service scene. Here's what to consider. 1. Xbox Game Pass boost. The acquisition, while sparking concerns about product quality and pricing, puts Microsoft in a prime spot to enhance and build on their Xbox Game Pass offerings. Rejigging pricing tiers, while a point of contention, could steady Microsoft's income streams. 2. Regulatory roadblocks felled. Legal hurdles have been dodged for now, despite FTC and previous investor jitters, indicating a strong defense that might attract bullish investors optimistic about Microsoft's legal resilience. 3. Potential market expansion. Microsoft is now better positioned to broaden its appeal in the gaming market. The ongoing integration will be one to watch as it translates strategy into notable gaming market advances through premium subscription offerings. 4. Layoffs and cost management. Shedding jobs could spell operational tightening efforts, cutting down on costs to balance the financial load from acquiring Activision Blizzard. My suggestion? Hold. While Microsoft might be set for lots of long-term potential following this acquisition, for now, the costs, ongoing integration efforts, and evolving subscription models create a mixed bag of optimism countered by layoffs and customer gripes, as noted by the FTC. Keep a close eye on their financials as the dust settles. Remember, lovely viewers, always do your own thorough research, scrutinize Microsoft in its tech empire context, and consult with financial advisors before making decisions to suit your investment objectives. You wouldn't wing it at table tennis with Bill Gates, would you? Happy thoughtful investing. Today's tech market activity showcased a whirlwind of legal moves, strategic partnerships, and trading quirks. Microsoft dominated headlines by conquering monumental gaming acquisition challenges and shaking up its Game Pass tiers, leaving investors debating whether to level up with the stock. Meanwhile, IREN Energy was caught in a legal storm overshadowing any Bitcoin mining glory they hoped for. Block wasn't immune to drama either, as major investors flexed their bearish muscles amidst sky-high expectations, and Intapp roped in AI pizzazz to transform the accounting world alongside Crete PA. Want more tech-savvy shenanigans? Like, subscribe, and share this video to spread the geekery, and make sure you swing by tomorrow for another spin around the tech news carousel.